Happy Thursday out there, Team 42. It's your skipper here, Darius to present our macro minute for Thursday, October 31st, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, will Beijing's panic translate to stabilization in the Chinese economy? Will central banks upset the global liquidity apple cart? And how is the U.S. consumer faring amid hurricanes and election uncertainty? Our answers are, we reiterate our view that Beijing's stimulus efforts will fall short of achieving a sustained economic acceleration in the Chinese economy. A transitory bounce that merely delays the progression of China's balance sheet recession is more likely. We do think Beijing is doing enough to remove left tail risk from their stock and property markets over a medium-term time horizon. In our view, that is bullish for grossly underowned Chinese stocks, the reflation of which just happens to be a stated policy priority for Beijing. Do not fight the PBOC. Despite recent hawkish developments out of Japan and Europe, we do not believe global central banks are likely to materially disrupt the significant increase in global liquidity over the medium term that is currently being signaled by our global liquidity monitor. The U.S. consumer is holding up just fine amid the twin tragedies of Hurricane Milton and Hurricane Helene and election uncertainty, supporting our 2-plus-year-old resilient U.S. economy theme in the process. We continue to believe investors looking for problems in the U.S. economy will be waiting on the sidelines for a while, continuing to lament the raging bull markets in risk assets we have kept 42 Macro clients on the right side of for 18 of the past 22 months. Transitioning to our 42 Macro dashboard here. As always, we'll wrap up with a question from our community. This one's regarding the central bank rate versus two-year yield. It says, good morning, 42ers. Can anyone help me understand the relationship between the central bank rate and the two-year government bond yield? In their case, the Bank of England rate. The Bank of England rate is at 5, and the GB 2-year is approaching 4.5 after yesterday's budget. We have an interest rate decision next week. I'm looking to put a bit more cash into two-year corporate debt and wonder if there is any near-term likely ceiling in the 2-year, given where the BOE rate is and softer inflation numbers. I'll answer that question piece by piece. So the relationship between the 2-year, obviously, and the policy rate, that the 2-year prices in what the policy rate is likely to average over the coming 2 years. There's obviously some a term premium component as well, but generally speaking, it's pretty negligible when you're talking about 2-year paper in sovereign debt curves. So essentially what's being priced in is obviously interest rates being cut, continuing to be cut by the Bank of England, that the pricing of which has since has evolved in recent weeks as central banks around the world, the pricing of rate cuts around the world has actually gotten less and less, i.e. less rate cuts have been priced into for rate curves around the world due to economic resiliency and in stubborn inflation data around the world, most notably in the UK. If you look at our UK grid model, which we maintain for every major country in the world, our grid model has both growth and inflation accelerating over a medium-term time horizon in the UK economy. And so ultimately the amount of rate cuts that is currently being priced into GBP money markets may actually not come to fruition, which ultimately means you could see a back up in the 2-year rate above and beyond what we've seen in recent weeks. So investors need to be aware, this investor needs to be aware of that. So we'll wrap it up there. Darius presenting our macro minute for Thursday, October 31st, 2024. Everyone have a wonderful day out there. Best of luck. We'll catch you back here tomorrow. And catch me on Macro Voices. I've got more Macro Voices today. Fantastic interview with our friend Eric Townsend over there. So definitely check that out. And tomorrow we have our monthly Macro Scouting Report exclusive for 42 Macro clients. So definitely come check that out as well. So everyone have a wonderful day. We'll catch you back here tomorrow. Cheers.